Hi everyone, this is Zenia Taubina, and this is the weekly chart review for the daily charts that I follow most closely. Let's begin with the S&P 500. So as of last weekend's review, there is still a question of whether the rally that started in August of 2024, so this segment, completed, or if it was going to make a slightly higher high before the bigger pullback. So now that answer has been provided. This rally has completed, and we are already in the bigger pullback. So where we stand now is that, as you can see, S&P did get quite close to the ideal support zone for the bigger pullback, even though it hasn't quite reached it yet. And in last week's review, one of the levels I was watching as a support level was 5505. So it tested the 5505 level and it's now bouncing. To open up potential for all of the correction to have completed, the absolute earliest indication would be a rally over 5783. So that's just a touch higher than this red line over here. And then to make completion likely, it would need to proceed over 5986. So that's this red line. Until at least above the lower of the two levels, further extensions down do remain reasonably probable. So far, while we did get a bounce on Friday, there is really not anything reliable in the structure to suggest that all of the decline completed. So depending on how it proceeds, how it reacts when it if and when it approaches the two resistance levels, we will have a better sense for how the decline is subdividing. At this point, if it provides another extension down, there will probably be a temporary bottom. For those of you familiar with Elliott wave, that would actually signify an impulse down off the top. So potential for a temporary bottom to be nearing is reasonably good. But so far, we don't have any indication. And if we get another extension down for a temporary bottom, the expectation will be that some bounce will develop, probably towards 200-day moving average. That's this blue line over here at 5740. And then from there, probably another move down. So until and unless it can get over 5986, big picture, we don't have any reason to think that the decline has completed. And we need to watch how the smaller degree action is unfolding intraday. So after the decline completes, and assuming that it holds this red line over here, which is a key support of 49.53. So for as long as this is holding, at least one more push higher to ideally reach 7,000 should be seen. And after that completes, we'll have to see how the rally is subdividing, whether it's heading already into this higher target of 7,000 plus, or if it's going to do another push higher to marginal new high and then another bigger pullback. So as it stands now, approaching ideal support, not quite there yet. Is there potential that it won't see ideal support? There is such potential. And one thing that I'm watching is this rising support for pullbacks. So far we came just short of that rising support, and most bullishly, that's basically where I could see this bottoming. But to favor it to have bottomed, it would need to produce the upside action that I just described. All right, moving on to Russell. So Russell is in a pretty different stance. We were watching for potential of completion of the rally off of the 2023 low, so this low. And it did make a marginal new high in late 2024. And last week it breached, so far only slightly, but it breached the low of August. So that's this red line over here at 1993. So with that, this rally is favored to have completed. And that does open up substantial downside potential for Russell, but not necessarily in a straight line. So how would I look at it in terms of what needs to happen for that substantial downside scenario versus um, this being all of the correction of a larger degree? And you can see it already retraced over 50% of the entire rally off of the 2023 low. So most bullishly, we have a 1-2 in Russell. But for that to become likely, a lot of things have to be confirmed first. So first things first, the first level of resistance is the 2112 level. That's this first red line over here. So for as long as Russell is below it, and so far there's really, looking at technicals, there's no reason to think that it will just take out that resistance. So for as long as it's below it, bounces towards it are setups for further extensions down. So this is probably the most clearly bearish setup that I can see in the charts. While S&P and NASDAQ have bearish potentials, Russell has a bearish setup if this bounce towards 2112 develops and fails below it. We do have the start of this potentially this bounce last week. So that's something to watch out for in terms of a potential bearish setup. So assuming it does not take out 2112 uh, in a rally in its rally off of last week's low, I will expect it to proceed down to this green box over here. So that's 1875 to 1935. And this is really the last constructive support zone that I can see on this chart, short of the 2023 low. So if something bullish develops either off of last week's low by breaking 2112 or proceeding to the green support zone and then developing something bullish, that could potentially be a setup for further highs. But until such time, 2112 is key resistance to look for. And above that, to make it likely that this was all of the decline, it would still need to exceed 2326. So that's the red line over here, was the second green arrow. Now moving on to NASDAQ. So in NASDAQ, NASDAQ chart looks quite similar to the S&P. It's reached what can be seen as a flatter channel support. It has not yet reached the rising low support that S&P also has not quite reached. And proportions of the decline are also approaching ideal, but ideally it will proceed a little bit lower to this green support zone over here. Similar to the S&P, to begin to view bullish potentials as unfolding, it would need to exceed the first red line over here with the green arrow or triangle at 20,253. And then to make it likely that all of the correction completed, it would need to get over 21,350. So that's the second red line over here. Until such time, further extensions down towards the green support zone remain reasonably probable. And as we approach the support zone, it does make sense to be on the lookout for action to be developing bullishly. So after this, and again, as I mentioned in last week's video, key level to hold here is the 16,973 level. So that's the red line over here with the red triangle. So for as long as that is not broken, NASDAQ is expected to proceed higher and with at least one extension higher and potentially two extensions, well, two or more extensions higher. So far, I see this as higher highs and higher lows, and that will be the perspective until and unless this red line over here breaks. And ultimately, NASDAQ does point to a rally of 26,000 plus. So it will have to be seen whether it gets there in one fell swoop or if it does another extension higher, then another pullback, and then a rally to that zone. So similar stance here to the S&P 500 in that sense. Now let's proceed to TLT. The TLT chart is, as we were discussing in last week's review, it completed what I viewed as a high probability bounce off of the Jan low. And at this point, it's really between the rock and a hard place. So for as long as 86 level, so that's this pullback level over here from February, for as long as that's holding, it does have potential to proceed higher. To begin to view that potential as materializing, I would need to see it over the 94.85 level. So that is this bounce high from early December. So it will take a rally over that to open up this target zone above. Now, if it breaks below 86.86, it will open up a very bearish potential. And the very bearish potential, so at a minimum below 86.86, it will favor a break of the Jan low. And then we'll have to see, is this break of the Jan low just basically making a minor extension down and bottoming in the vicinity of the 2023 low? So that's 82.42. So somewhere here would be potential for a bottom. Or is it going to proceed lower and accelerate to the downside? So for that scenario to become likely, it needs to break 77.50. So that's this red line over here. And that will open up a target of 64 to 69, so substantially lower. Even if this may seem like a lot, that's going to be a whole lot lower below here. So key decision zone, so far, no reason to favor one or the other. But I'm viewing this defensively because a break of 86.86 could trigger major downside. Moving on to gold. So the gold bullish pattern, which I've tracked uh, for a number of months now, can be viewed as complete. So I'll start there. So that potentially has opens gold up to substantial decline. And I'm talking big picture. So we're talking weekly and monthly charts. So at a minimum, the rally off of the November low, so this segment, is with the higher high that we're getting we got last week, and it will ideally continue a little bit higher towards 285. So this segment is favored to be completing. So then, depending on what happens from here, at least some pullback becomes likely. And if it can now break the 261.25 level, so that's the little pullback low that we got here. And those of you that follow my work in the daily and weekly service, or even on Twitter, I believe I posted that I viewed this as a setup for another extension higher. So we're now getting that extension. And if this low is broken, it will suggest that this whole segment of the November low has completed. And once that completes, the question becomes of where, uh, how much additional decline we will see. And without getting too technicals and too Elliott wavy on you, I will say that the November low, so that's 234.24, this red line over here, is a break of that or holding that is really what is going to be key to the big picture. So out of this red zone, I'm expecting some pullback. For as long as this November low is not broken, it could be viewed as just a hiccup on a very bullish trend. But if this low is broken, odds begin to shift in favor of a long-term top, which then becomes likely below 210.71, so this red line over here. So again, not really yet a point where I can say that substantial downside will follow. Some downside is likely to follow from sub 286. So for as long as this red sell zone is not exceeded, some downside is likely to follow. But how much downside remains to be seen, and that will clarify the big picture stance in gold. Moving on to the final chart, which is GDX. So in GDX, we have what so far is a three-wave rally off of the 2022 low. And questionably proportioned pullback here, and now we're retesting the high. So ideally, this upcoming week, we will see an extension higher to reach at least 45.79. So that's the high from a few years ago, and ideally that level will get tested. And then it's very much a point of decision for GDX as to what it wants to do with its life longer term. So if we see a top that if it does not exceed 49.25, so that's this red line with the green triangle, if it tops in the red zone and then reverses below 38.58, that will open up substantial bear scenarios, which will then become likely if it can continue below 33.42. So that's the second red line. Now, if it gets here and it manages to get over 49.25, then that will be the earliest sign that we may be seeing acceleration to the upside. So that's a scenario that those of you that have followed my GDX work, I've always had potential for acceleration, but really up until it gets over 49.25, I have no reason to favor it. So it's very much a show me stance. And so far, GDX has been failing to show anything of significance, big picture. So if it can get over this red line, that will open up potential for acceleration up, and that acceleration up will become likely over 59.71. So next resistance zone then will be 54.06 to 59.71. And from here, odds of acceleration will increase substantially. So again, potential for topping, nothing to suggest that it likely is topping yet. And to begin to favor a longer term bullish action, it needs over 49.25. On the downside, a reversal below 38.58, and I'm only going to mention daily chart support levels. Those of you that follow my paid work know the intra-week support levels. But the bigger picture support levels are 38.58 and then below it 33.42. And if even the upper one is crossed, then odds of a top increase substantially. So that's it for this week. Thank you for joining.